Yesterday, we audited the structural fuel of the 2026 economy, uranium. Today is Friday, April 3rd. We are concluding the first full week of the new quarter, and the institutional pivot has moved from the energy sector into the nervous system of the global grid. Today, we perform the technical audit of ticker number 3, CPER, the Copper Trust. To understand CPER, you must understand that copper is no longer a base metal. It is the conductivity king. In our previous sessions, we discussed the $750 billion AI capital expenditure move. That money is being spent on compute, yes, but compute cannot exist without the copper atoms required to power and cool it. On March 30th, Jerome Powell admitted at Harvard that material-driven inflation is a primary concern for the Federal Reserve. This is the architect's signal. While the masses are looking at the price of consumer goods, the institutions are looking at the massive shift in market balance. As of this morning, April 3rd, the International Copper Study Group, or ICSG, has officially abandoned its surplus projections. We are now facing a global refined copper deficit of approximately 330,000 metric tons for 2026. This is the first structural shortage since 2009, and it is hitting at the exact moment that AI infrastructure demand is reaching a fever pitch. To audit CPER effectively, you must use the tools of the professional class. The first tool in your kit is the ICSG Monthly Copper Bulletin. You can find this data on their official portal. As of the March 2026 report, exchange inventories in London and Shanghai have plummeted to 5-year lows. When inventory disappears while demand is accelerating, you are in the squeeze zone. CPER is a unique vehicle because it doesn't just hold mining stocks. It tracks copper futures. This gives you a direct, high-conviction play on the price of the metal itself, which recently touched record highs of $14,500 per ton during the January pressure test. The predictive analysis for CPER in 2026 is driven by the electrification of everything. Beyond the data centers, we are seeing the massive rollout of autonomous logistics and the modernization of the US power grid. JP Morgan's latest research confirms that a single hyperscale AI facility can require up to 50,000 tons of copper. This isn't optional. There is no software substitute for conductivity. When you look at the supply side, the ghost move becomes even clearer. Major producers in Chile are facing labor disruptions and declining ore grades, meaning mine supply growth has fallen to a stagnant 1.4%. This creates a supply vacuum that money cannot fill. Your first micro execution line for today. Use a Bloomberg terminal or a professional market data tool like TradingView to monitor the copper to gold ratio. Historically, when this ratio begins to climb during an inflationary cycle, it signals that the industrial economy is decoupling from the paper economy. We are seeing that decoupling happen right now. As an architect, you want to see CPER outperforming the broader commodity indices. This confirms that capital is seeking utility assets over speculative assets. The second micro execution line. Audit the backwardation of the copper market. You can track this by looking at the LME, or London Metal Exchange, forward curves. When the spot price of a metal is higher than the future price, it means the market is desperate for immediate delivery. This is the ultimate scarcity signal. If you see the copper market moving into deep backwardation, it is a sign that the tech giants are beginning to hoard physical inventory to ensure their data centers stay on schedule. This hoarding phase is where the most significant price appreciation occurs. We must also address the geopolitical layer. As the global order splits, copper has become a national security metal. The US and the European Union have both officially added copper to their critical minerals lists in 2026. This means government-backed stockpiling is now a permanent feature of the demand curve. CPER allows you to sit on the same side of the table as the sovereign wealth funds and the national defense agencies. You are owning the substrate of the modern world. But there is a final, urgent reason why this copper deficit is the only thing standing between you and the next wealth cycle. On March 31st, Anthropic, the $30 billion AI titan, accidentally leaked 512,000 lines of proprietary source code for their flagship agent, Claude Code. This wasn't just a glitch, it was an exposure of the digital nervous system. This leaked code reveals a massive new demand for always-on autonomous agents, digital workers that require a constant, unwavering connection to the physical grid. If the copper substrate isn't there to support the hardware, these leaked blueprints are useless. Yesterday was about the fuel. Today is about the flow. Without copper, the nuclear power we discussed yesterday has nowhere to go. Without copper, the AI chips have no way to communicate. CPER is the bridge between the energy we produce and the digital world we inhabit. You are no longer just an investor. You are a stakeholder in the conductivity of civilization. As we close out this first week of April, audit your portfolio one last time. Are you holding companies that use copper and are vulnerable to rising costs? Or are you holding the conductivity king itself? The institutions have already moved $500 billion into the physical truth. In our next briefing, we are moving from the atoms to the algorithms. I am going to show you how to take the leaked Claude blueprints to build your own AI automation agency. We are shifting from managing markets to managing machines. The physical world is the floor, but the leaked code is the ceiling. Subscribe to stay equipped for the next income audit. Stop being the liquidity, become the architect. I will see you in the machine.